Tesla is up 22% since its Q3 report. Today we're talking about the reasoning why this is happening, of course, other Tesla news, including analysts' price predictions and the RoboTaxi service and what this could mean for other ride-sharing companies like Uber and Lyft. So many exciting news. So welcome to my channel where I give you the latest Tesla news. The first step towards getting somewhere is to decide that you are not going to stay where you are. JP Morgan. Transportation is about to change forever. Tesla's ambitious plan to a RoboTaxi network will determine the future of the company. This venture is aimed to transform Tesla into not just an automotive manufacturer, but also an AI and robotics powerhouse. The reveal of the Tesla Cybercab and Rovan or RoboBus, a 2-seater RoboTaxi or RoboCab, and a 20-seater RoboVan or bus, or Rovan, I guess we'll find out which name Tesla is choosing. Both without steering wheel or pedals or door handles. Everything is automated, which was a declaration of what Elon Musk is intended to do. Elon Musk has projected that this innovation could significantly disrupt the current ride-hailing economy. The winner of the race will be the one with the highest quality, safest service, and lowest prices. Ark's Tasha Keeney had to say this.
So first I'll point out, so it was 20 Cybercabs, and then the rest was actually, I don't know if it was Model X or Model Y. I only saw Model Y vehicles there, but so these are existing Tesla cars. So you don't sit we didn't sit in the front seat of the car. We sat in the passenger seat and behind. That did, within this closed circuit lot, drive fully autonomously. So it proves that they can do this on the rest of their vehicle lineup as well, which I actually think is really meaningful. What people missed, which you could have caught during the live presentation, was previously Tesla in their in the autopilot day, which is now a number of years ago, they had talked about price per mile, and I believe they said something around like $1.50. I forget exactly what the benchmark was, but the price that they gave this most current at this recent event was a lot lower than what they've said in the past. Okay, so Elon said that at scale, it could cost Tesla about 20 cents per mile to offer RoboTaxi service, and then with taxes and other fees, to the consumer, it would be more like 30 to 40 cents per mile. Again, I think that's at scale. They do not have to charge that price at first because you simply just have to undercut Uber. But why is it so disruptive? Okay, well, Uber in Western markets is around $2 per mile. Driving your personal car in the US on average is about 70 cents per mile. And actually our associate Akash just refreshed this work. So great job, Akash. And so when you lower the price per mile, both below ride hail and of driving a personal car, you expand the ride hail market far past what we see it as today for human-driven ride hail. So Uber and Didi, this is like hundreds of billions in terms of market value. A RoboTaxi could make this like 10 trillion plus in market value if you look at the global market for miles traveled. Because at that point, you convince people to forego personal car purchases. And in urban markets, this is what we think will be the dominant form of transportation, say, in the next decade.
So how will things change? Will Uber be crushed by Tesla? Will there be some sort of partnership? Well, Tesla stock crushed 8% after the V-Robot event, while Uber shares skyrocketed 10%. My guess is that because investors wanted to hear about the Model 2 low-cost vehicle, Gene Munster, though, explained it perfectly when he was saying that Tesla did not talk about the lower-cost EV simply because it would have stalled sales of current models. Being an Uber driver is not the most lucrative job. After all expenses are paid for, there isn't much left, given the time it takes to pick up people or parcels and dropping them off. Most is actually going towards the upkeep of the vehicle. This is what autonomous vehicles are trying to undertake. They're not going after the drivers themselves. Tesla is planning to give drivers back their time and tackle expenses. that the drivers needs to pay. Imagine owning a $25,000 to $30,000 vehicle designed specifically to reduce annual maintenance, have low fuel cost and high efficiency, and it works for you. You are doing other things that are important to you in the meantime. And with the Rovan, expenses could get down to 5 to 10 cents per mile per person. Now imagine Amazon service is using a Rovan. This could save Amazon a ton of money, especially if Optimus is the one to deliver the packages, or the Rovan could have lockers installed on the inside for customers to use a special code to release their packages. And with Tesla being used by other companies, Tesla could charge a small fee and build another income stream. What about rental companies? Car rental companies might start leasing out RoboTaxis or Cybercabs. And then you think about insurance companies. I believe once autonomous vehicles are accepted, insurance companies are not as needed anymore. They will have to increase fees for the remaining people driving their own cars, which will turn more people to use a ride-sharing service instead of owning their own car. The Cybercab will clean itself. So will we have car washes or detail business? Something to think about. But surely in the future, a lot of these things will start being missed. Let's talk about analyst predictions after Q3, which was amazing. Cantor Fitzgerald adjusts price target on Tesla to $255 from $245, maintains neutral rating. Needham reiterates hold on Tesla. Guggenheim adjusts price target on Tesla to $156 from $153, but maintains a sale rating. KGI Securities upgrades Tesla to outperform. Price target is $276. Redburn Atlantic adjusts price target on Tesla to $160 from $140, but maintains a sell rating. Philips Securities upgrades Tesla to reduce from sell, adjusts price target to $230 from $135. Stifel adjusts price target on Tesla to $287 from $265, maintains a buy rating. Piper Sandler maintains overweight rating and raises price target to $315. On Friday, the news said that Tesla NC continued upward trajectory, rising 2.7% following a massive 21% jump on Thursday, its biggest one-day gain since 2013. Elon Musk sees $33.5 billion wealth surge in a day as Tesla stock adds nearly $150 billion in best performance over a decade. Elon Musk experienced a dramatic increase in his wealth, adding $33.5 billion to his net worth on Thursday. The surge was driven by a 22% rise in Tesla shares, marking the company's most significant stock increase in over a decade. So this is what happened. The stock surge followed Tesla's announcement of its highest quarterly profit since mid-2023. During the webcast, Musk projected up to 30% growth in vehicle sales for the upcoming year. Additionally, the Cybertruck contributed to a quarterly profit for the first time. At close, the company market value increased by nearly $150 billion, marking the stock's best day since 2013. This financial leap came after Tesla faced 4 consecutive quarters of underwhelming earnings amid declining consumer demand. Musk's fortune stands at $270.3 billion, positioning him $61 billion ahead of Jeff Bezos in the Bloomberg Billionaires Index. Now, why should that matter? Tesla stock surged recently following a strong third quarter performance that exceeded earnings estimates and showcased improving margins. Analysts highlighted the company's robust vehicle delivery outlook for 2025 as a key factor in its recent success. Additionally, tech stocks rebounded on Thursday with Tesla leading the charge. The recent earnings report has been positively received by analysts.
I mean, the whole story is about gross margins. I mean, that's really been the headwind on Tesla stock. I'd say 30 to 48 hours of a headwind to the stock. You saw gross margins. I mean, this is a blowout. Not even us thought that we could see a gross margin what essentially is anywhere from a 200 to 300 bit beat. This shows price cuts now under control. Margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock. Ultimately, this will have a 3 in front of it as a stock as the gross margins start to trend up, and as well as growth into next year from a delivery perspective.
So does the RoboTaxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous, is robotics, is essentially the AI play. Street, what they needed to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for, because that was ultimately the core of the story.
Wedbush analyst and I've said the big story of the Q3 earnings report was the margins, now bolstering a strong signal of what investors wanted to see. The whole story is about gross margins, showing the worst is in the rear view mirror that gross margin is Goldilocks for any bull. For bears, it's a nightmare. Investors were also happy to hear Tesla is prepping for 2025 for the year. It will resume a sizable growth rate in terms of deliveries, although the company is on track and be about level with 2023 at 1.8 million. CEO Elon Musk said during the call that 2025 will look a lot different. This will mostly be due to the companies launching several affordable models in the first half of 2025. George Ganorikas of Canaccord Genuity said this.
So what did you see in here that made you want to move your price target higher?
It was a few things. First, the margins were exceptional. And if you recall, over the last several quarters, Tesla's auto gross margins have come down because they needed to cut price based on weakening global auto sales because rates went up. But now they had an incredible quarter from a margin perspective, much better than anyone thought, because the costs of production came down to levels they've never before seen. That was the first thing. The next couple things were, despite skepticism, they reaffirmed that they would be launching some lower cost models in the first half of next year. And as you played, Elon Musk said they would grow sales probably 20 to 30% next year. What that means, what's very, very important for Tesla stock, is that the revenue and earnings growth are going to reaccelerate. And if you follow the growth rates of the revenue, that stock very closely follows them. So if we see that reacceleration, which we saw since the first quarter, we're going to see Tesla stock continue to outperform.
Ark Invest Cathie Wood sold over 85,000 shares across 2 ETFs on Thursday, following the biggest day for the automaker in a decade. But it's not because of profits. It is because Tesla will not over-concentrate either ETF, a move the company makes frequently after big days in the market. ARKK sold 77,513 Tesla shares, about 0.363% of its holdings. ARKQ ETF sold 7,943 Tesla shares, or 0.2592%. The 85,456 shares equals to over $22.2 million in value for the firm, which was used to purchase other stocks. Ark is only allowed to have a set percentage per company in our portfolio, so don't be fooled by the media. Thank you so much for being here. My name's Claudia. I will see you in the next video, which could be this one. Goodbye.